Germany plans action against the Kremlin. And Mercedes considers an electric version of its luxury Maybach brand to help defend its high-end market position. We'll hear from our interview with the Daimler CEO, Ola Källenius. Matt.
Let's take a look at futures. European futures are higher, and you can see Euro Stoxx 50 futures up 1%, DAX futures up 0.8%. FTSE futures not gaining quite as much. They're not quite as high, the London traded futures, as we do see the rest of the continent's benchmark equity indexes. Cash trading starts now. If you take a look at the global macro movers screen, the left-hand column shows you the equity indexes. So they populate there as they start to trade. The FTSE typically the first out of the gate, and it is today as well, up about 0.2%. So we are seeing gains in London right now, and those gains increasing. As you can see, the block turns green there. It's gray when there's not very much change. As it climbs, it'll turn greener, or as it drops, it'll turn redder. And actually, the shading is pretty cool. That's different as well. The CAC 40 is up 0.9% out of the gate in Paris, almost 1% now, and the IBEX 35 in Madrid is up more than 1%. So we are seeing European markets opening higher this morning after U.S. stocks hit yet another record in yesterday's session. Investors now assessing signs that the rally may be broadening into other sectors. And we'll take a look at the sectors a little bit later. It'll be interesting to see who the winners are here in the European session. Of course, we don't have the giant tech sector that the U.S. does. Joining us now to talk about all of this and more is April LaRousse, Insight Investment Fixed Income Investment Specialist. And April, you look at this from obviously the rates side. What do you think about the possibility of, as the equity markets rotate into cyclicals, what do you think about the possibility of a recovery for those companies?
Yeah, well, we're actually seeing this in the fixed income markets as well, that, after the initial, well, shall we say the beginning part of the COVID stresses, when cyclicals were, very badly hit, when we started to see all of the various programs put in place and obviously the very aggressive monetary loosening, cyclicals definitely started to rebound. Financials obviously doing very well as well. And now, there isn't much of a big difference between cyclicals and non-cyclicals in terms of valuations in corporate bonds, certainly. I think, we would look at where cyclicals are trading now and think, they look fully priced. If you think that actually what we're going to start seeing is the true credit impact of the economy essentially shut down. We haven't really seen that yet. So although we looked at cyclicals in the depths of the COVID sell-off and thought, there's some value here, now we're not quite as excited about the cyclical part of the corporate bond market.
Good morning to April. We see the French market up by just over 1% today. The CAC 40 outperforming the rest of Europe just a little bit, or at least setting the pace. We've seen this fiscal reboot being announced by France, and part of that seems to be a pivot towards the green agenda. We've seen something similar coming through in Germany. How excited are you by opportunities in that space? How much opportunity is there to get involved in opportunities in that space?
Yeah, it's really interesting. We're seeing one government after another coming out in Europe and starting to issue green bonds. And And we're kind of quietly discussing in the office at Insight, maybe the gilt market might even do the same. But yes, obviously France, big green bond issuer in the context of what is a growing market. Germany, really importantly, issuing their first green bond. And really the difference between what Germany has done and what everybody else had done is that Germany actually wants to build the curve. So they do want to be issuing 2s, 5s, 10s, 30s. And of course, they are considered really the true risk-free European government bond yield. So that is really significant. It will entice yet more corporate issuance in the space. Obviously, we've already seen a lot of SSA issuance or supranational type issuance. But for us, our clients want this type of investment. They think it aligns well with their values. And there's definitely not enough supply to meet demand.
What about duration? I mean, for a while we were seeing countries and companies come out with really long duration debt that the market seemed to be clamoring for. Is that still the case? And what part of the curve do you find most interesting?
Yeah, certainly. I mean, it's quite smart, really. If with yields being so low, companies think, okay, I'm going to issue the longest possible bond that I can actually find investor interest for, lock into those nice low yields and low rates. And for the most part, there's been plenty of demand for the long end, particularly out of the US. Out of Europe, you tend to see more shorter and medium dated bonds, and that's really where the demand is. What we think we're going to see is a continued sort of flattening of curves as investors say, there's really not much yield available anymore at the very front end, thanks to low interest rates and QE, et cetera. And so they will be tempted most likely to be moving longer along the curve just to get that slightly more yield. And therefore, it makes sense that, if you're a company and you need to issue a bond, you're going to think, I know, I'll issue a longer dated bond because that's probably where the demand is going to be. So it kind of, it actually suits both investor as well as corporate.
When you look at some of the pricing around corporate debts, April, at the moment, and you look at, in particular, the junkier end of things, I was reading some analysis by a colleague, James Crombie, just yesterday, talking about how there's a whiff of desperation in the junk rally. Are you concerned about people caught out in that particular part of the credit market?
Well, yeah, I mean, certainly there's a reason, junk bonds are called what they are. We are expecting to see a continued increase in default rate. You haven't really seen much in the way of defaults, obviously, because of all the lovely help that companies have been provided in the form of loans, as well as, of course, capital markets, very happy to buy their bonds. We're very nervous about the very lowly rated part of that universe, so pretty much staying away from things in the CCC space. Think that they're quite expensive anyway. You're really not being compensated sufficiently for the risks out there. It's also a bit more company by company. Companies who can actually generate cash flow in this environment are key. So we're paying a lot of attention to corporate liquidity and the ability of the management of these businesses to actually look at their liquidity ladder and say, okay, when should I be trying to refinance my bonds? Don't leave it too late. Make sure you issue when the market is open. And what we have noticed in the high yield space, which is interesting, is there hasn't been any decline in companies actually calling their bonds at the call date. There was some concern that perhaps bonds wouldn't be called, and you would basically see markets having to reprice to readjust when is this bond actually going to mature. But companies have actually been continuing to call bonds because they have been able to refinance. I mean, but circling back around to kind of fundamentals in the junk bond or high yield space. You really need to do your homework. If you can find businesses who are either benefiting from the COVID situation or who are just unimpacted by it, then there is some opportunity. Admittedly, not as much value as there was, shall we say, in April and May when yields were considerably higher, but still, compared to investment grade, some interesting opportunities. Yes.
April, thank you very much. April LaRousse, Insight Investment Fixed Income Investment Specialist. Stay with us. A little bit more from April coming up on the program. We will talk about central bank firepower. We touched on it a little there, but we'll continue that conversation. Dave Ramsden at the Bank of England says that the BOE has plenty of capacity to ease further, that as the UK faces a triple threat. More on that next. This is Bloomberg.
welcome back to Bloomberg Markets. This is the European Open. We are 10 minutes into the session, and we're looking at some decent gains. The DAX up 147 points right now to 13,388. The CAC 40 in Paris up 1.5% to 5109. Let's get the Bloomberg Business Flash. These are today's top corporate stories from the Bloomberg terminal. For that, we go to Laura Wright. Laura?
Thanks, Matt. Sanofi is starting human trials of its COVID-19 vaccine after early-stage data impressed the drug maker. It brings it one step closer to late-stage clinical trials that aim to start before the end of the year. This shot, being developed by Sanofi and GlaxoSmithKline, is one of more than 175 coronavirus vaccines in development. Airbnb has rebuffed an approach by investor Bill Ackman. Sources tell Bloomberg his SPAC, or blank check company, approached the holiday rental firm about a merger. We're told Airbnb hasn't completely ruled it out, but prefers the traditional IPO route. No official comment on the story, but in the past, Ackman has publicly said the company is on his radar. Robinhood is facing a regulatory probe. Sources tell Bloomberg the SEC is looking into if the firm properly informed its clients that it sold their stock orders to high-frequency traders. It's related to disclosures prior to 2018, when it made the information easier to find on its website. Robinhood didn't comment on specifics, but says it cooperates fully with regulators. That's your Bloomberg Business Flash. Anna, Matt.
Thanks very much, Laura. Laura Wright here in London with your Business Flash. Turning to the UK then, Bank of England Deputy Governor Dave Ramsden says it has capacity for further easing if needed. That's as the UK enters what could be a chaotic final few months of 2020. The combined threats of a resurgence in the coronavirus, a spike in unemployment, and a messy Brexit are hanging over the country. That in relation, of course, to the trade negotiations still ongoing across the channel. April LaRousse, Insight Investment fixed income investment specialist, is still with us. April, what do you take away from the flurry of news flow surrounding the UK over the past 24 hours? It seems that there is more the Bank of England can do, but I think the market was expecting that the BOE could do more into the winter if needed. What's your expectation?
Yeah, and in fact, watching that testimony in the Treasury Select Committee, that's exactly what they said. If needed, they will do more. And they pointed out that the two things they can use are QE and forward guidance. And they obviously mentioned negative interest rates, but are still kind of being quite cautious about talking about wanting to use that. I mean, they have been tapering the amount of QE they've been doing. They basically more than halved it from the peak at the early part of the COVID crisis, so that they could easily go back to increasing it to 13 billion a week of purchases. And you know, in terms of increasing the quantum of the firepower, you know, we're expecting that they will increase QE again by either 60 or possibly even 100 billion around December time, November, December time, you know, just to make sure that they've got sufficient firepower should there be disruption, either in the form of a second wave or, of course, Brexit disruption should the trade deal not be what the market was expecting. So, yeah, they can do more, and frankly, they will do more. And that was their tone in the committee meeting.
You know, April, a lot more often have been hearing signs of tightening. Olaf Scholz on the fiscal side was talking about the fact that Germany needs to put its debt limits back on in 2022. And Jens Weidmann from the Bundesbank was saying, you know, the ECB needs to unwind some of the balance sheet that's built up and also go back to, you know, more ordinary monetary policy as soon as this crisis is over. Is it too soon for that?
Yeah, I think it is, because as I kind of hinted at earlier, we don't think we've yet seen the credit impact of COVID on the economy. You know, that has yet to work its way through the system, which will come in the form of higher unemployment and unfortunately more companies defaulting. So trying to take away the much needed stimulus in place too soon would really not be a good thing. And of course, when you add Brexit uncertainties into that as well, you really don't want to be too soon to be talking about removing stimulus. In fact, you probably want to be erring on the other side and make sure that things stay nice and loose and liquid to basically make this as soft a blow as possible.
And in terms of the underlying economy in Europe, then, April, we're just getting some numbers across the Bloomberg. Spanish August composite PMI falling to 48.4. It's not a million miles below the forecast, but it is below. And it is crucially back below 50 in contraction. I suppose this highlights what many people have been talking about. Yes, we saw a recovery after the slump in March, in April, but the risk of a sort of W-shaped experience for the Eurozone economy is pretty real.
Yeah, for all economies. And I think the economies that seem to be struggling the most are kind of coming out and then going back down somewhat are those which are heavily reliant on tourism. And clearly, Spain has had a bit of a tricky summer. But that's absolutely a risk. And I think, certainly the governor of the Bank of England is aware of that, as is the UK government generally. And they need to just make sure that they're doing everything possible to support. Europe generally has seen some better numbers on the whole. What we're seeing is PMIs, above the 50 level, which is obviously indicating things are getting better. But you have to expect this is going to take time. If you jumped off the roof of your house, it would take some time for you to get up and walk away. You wouldn't kind of immediately jump to your feet and start jogging. And that is how we're viewing the economic recovery.
April, thanks very much for joining us. It's been great to get your take on this stuff. April LaRousse, Insight Investment Fixed Income Investment Specialist, and she's going to be continuing the conversation with us on Bloomberg Radio in just about 43 minutes time. So at 9 a.m. UK time, you can get more from April LaRousse of Insight Investment on Bloomberg Radio. If you're in the city, you can tune in on London DAB. Anywhere else, obviously, you can just Google Bloomberg Radio, or you can see it on the terminal, of course, and listen to it there. Coming up, Daimler unveils the latest version of the Mercedes S-Class and dangles the prospect of an all-electric vehicle as traditional car makers play catch-up to Tesla. We'll hear from the German automaker's CEO next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open, 20 minutes into the session, and we're looking at 1% gains across European equity indexes and about 0.75% higher on the FTSE in London. Now, here in Germany, Daimler has unveiled the latest iteration of Mercedes' top-of-the-line luxury sedan, the S-Class, and leaving the door open as well for an all-electric version under the Maybach brand. Traditional car makers are pouring billions of euros into electrifying their entire fleets as they try to play catch-up to $400 billion company Tesla. I spoke to the CEO of Daimler, Ola Källenius, about the trends he's seeing in the industry.
We have already made the strategic decision to go towards CO2 neutrality, so you will see a whole host of electric vehicles from Mercedes coming here in the next few years. And perhaps COVID will also add an additional push. Some of the legislation of the COVID money that the governments are putting into their stimulus packages here in Europe also contain pieces to incentivize low carbon vehicles or electric vehicles. So yeah, it could be. But I think also that we see what people has kind of taken for granted, your individual freedom, self-determined individual mobility. The perfect way to do that is the car. So maybe we will also have a little bit of a renaissance of that thinking as a result of COVID.
What kind of recovery are you seeing now? I mean, the Ministry of Economics here in Germany just said the recovery is going to be stronger. The downturn wasn't quite as bad as they had thought. When are we going to see 2019 levels again at Daimler?
It's hard to pinpoint exactly when we'll get back to that level, but what we can see now after we've had the first quarter affected by the pandemic, first hitting China and then the second quarter, Europe and the United States, we see now that sales are picking back up again. China is leading, and we're already now a couple or 3 months into quite healthy growth in China. United States and Europe are not on that level, but after that unprecedented drop that we had in Q2, we're now starting to come back towards normal levels again.
Speaking of China, you've got a battery deal there. You have some big shareholders out of China as well. Are you concerned about the rocky relationship between Washington and Beijing right now?
We have very strong partnerships in China. It's our biggest market on the passenger car side. For the US, it's our second biggest market on passenger, but our most important market on trucks. In the United States, we've been there over 100 years, more than 25,000 employees, 40 billion worth of sales, and I think it's 20 odd factories that we have there. So for us, it's not an either or. We got to be in both these important regions and are building our investments in both.
Are you confident that you have a solid battery supply and a stable, commodity pipeline in order to build the cars that you want to sell?
Absolutely, and we have added a couple of very important strategic partnerships only in the last couple of months with CATL and also an up-and-coming player, Forex, where we took an equity stake. Not only to secure supply, that's important, but really to go into R&D together, a deep integration of R&D, looking at the innovations for the future. How can we push the game on, get better energy density? How can we get costs down of the battery cells? So yes, I think we're in a strong position.
In terms of the market, we've seen a lot of prices come down, and I know you aren't in a hurry to do any M&A, but when you look at some of the iconic brands that have been hit hard, especially in England or India via England as well, are you tempted at all?
We have no plans for M&A at this stage, and we're very much focused on Mercedes-Benz. That's our core. We know our customer. We're a technology, we're an innovation, engineering-driven company. We really want to be one of the architects of this transformation. So I don't think we need a distraction on some bigger M&A deal at this stage. Focus on our company, make it financially strong, and also lead in transformation.
It's a good time to be in the finance business. Rates are low. I mean, financing the auto industry. You've been able to take advantage of that with a big bond offering in the beginning of the year. Do you think you can go back for more?
Our financing portfolio is substantial, both on the financing and leasing side around the world. And yes, we had a very strong subscription when we issued that bond. And the rates, in spite of COVID, had stayed quite reasonable. So the spreads have not gone crazy here. And I think that's important. I think it's also a good sign that financial markets, in this case, kind of stayed rational.
When do you think Daimler shares are going to be able to get back to a place that you're happy with them?
I think there's a lot more potential. This company doesn't only have a great history and tradition, it has an even greater future. And it's up to us to unlock that also in terms of share price. The current share price, in my point of view, should have a significant upside.
And that was Daimler's CEO Ola Källenius in Sindelfingen at the factory producing the new S-Class. That's their big profit driver. You know, he was talking about the potential, and this is a 47 billion euro company that has, 175 billion euros of sales. Compare that to a company like Tesla, which only has 40 billion in sales, and they're worth more than 400 billion. So it's a huge split.
Yeah, incredible comparisons to Tesla abound. Up next, we'll talk about Facebook as it fires a warning shot at conventional media in Australia that has global implications. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the trading day, and we're looking at gains, especially across the European equity indexes, the continental benchmarks. But if you look at the Stoxx 600, it's the broader benchmark for European stocks. You see more than 1% is the gain on the day so far. If you take a look at the group ranked return screen, the GRR screen, you can see that European investors also are buying the cyclical stocks, and those hit hardest by the COVID lockdown today. That's what we saw driving U.S. stocks back to a record again yesterday. Travel and leisure stocks right now are up, as well, all of the industry groups are up. You can see all green arrows here, but auto parts and automakers leading the way, as well as travel and leisure stocks. Basic resources, oil and gas, are not doing as well as the rest of the pack. But we do have a day when a rising tide lifts all boats. With that, let's get the Bloomberg First Word News. We go to Laura Wright in London. Laura?
Thanks, Matt. Germany says tests show unequivocally that Russian opposition leader Alexei Navalny was poisoned by Novichok, the type of military-grade nerve agent used in the Salisbury poisoning back in 2018. Berlin will now consult with its European and NATO allies to formulate a plan. Chancellor Angela Merkel says the world is waiting for answers from Russia.
We are expecting that the Russian government explain this incident. There are very serious questions that only the Russian government can answer, and they must answer them.
China is planning broad support for its domestic chip sector. Sources tell Bloomberg the move is to counter restrictions from the Trump administration. They say Beijing is giving this the same priority that it gave to building up its atomic capabilities. The policy includes a suite of measures to bolster research, education, and financing. UK Prime Minister Boris Johnson is trying to win back trust after a series of policy reversals. His return to Westminster has seen a number of face-to-face meetings with Conservative MPs who are anxious over his handling of the crisis. Chancellor Rishi Sunak is also promising there will be no, quote, horror show of tax rises, but he isn't ruling out temporary hikes to pay off pandemic debt. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thanks very much. Laura writes here in London. Now, Facebook is firing the warning shot to the media industry after Australian lawmakers drafted legislation that would force the tech giant to pay publishers for their stories. Facebook responded with its own unprecedented measures. The social media giant said if the law passes, it will block both publishers and Australian individuals from sharing any and all news on its pages and apps. Joining us now is Rob Nichols, Associate Professor at the Business School of the University of New South Wales in Sydney. Very good to see you, Professor Nichols. Thanks for joining us. Let me start by asking where you think, is this the end of the story in Australia? Are we going to end up in this situation where it is not possible to get news from official news sites and share news on the Australian Facebook page? Is that where we're going to end up here?
It's where we're going to get to if the law is enacted. So it's essentially a very big, the nuclear option threat from Facebook as part of a lobbying pattern. So the draft legislation has been out for review. The review's closed on Friday, and Facebook made its announcement this week. If it does go ahead, the way that the legislation works means that Facebook couldn't just block access to Australian news sites. It is all news sites. It would block access to Bloomberg if I was to post on my Facebook page, I've been on Bloomberg today.
Now, I mean, of course, I'm sure that Bloomberg executives would love you to get their news through a number of different websites, but isn't it a better option for society at large if Facebook does block any and all news? I mean, isn't it better if people go to actual news sites to get their news and don't have the fake news problem that Facebook is so infamous for?
I think there's a couple of issues. The first is that actually most news media businesses quite like the symbiotic relationship with Facebook. So Facebook curates and provides those links. The news media businesses publish the links, and Facebook generates a lot of traffic for news media businesses around the world. The issue that the code's trying to resolve is what's the net value of that symbiotic relationship? And there's a basic assumption that it's probably towards the content creators rather than the content curators. I think the risk of having no news on Facebook or Instagram is that it's actually the fake news, the sources of content, which includes race hate, all of those other things that will become the paramount delivery of inverted commas news in an environment where Facebook blocks access to legitimate quality journalism.
So hang on, Rob. If they block any and all news, doesn't that include fake news? I mean, or does Facebook decide what's?
Yeah, no, it's Facebook decides. So if Facebook decides that QAnon is a group that simply shares its own opinions, then that would look very much like news to Facebook users in Australia. And that's the societal issue that flows from this type of option. It's also, though, I think, the one that says either you'll end up with some replacement service that Facebook runs the risk that people will actually use that for news first and then find that they can get a lot of the social media aspects that they were already getting from Facebook or Instagram. Or, and this isn't quite yet decided, if Google decides it won't follow Facebook down this will exit option, then potentially Google could take a lot of the ad share that currently Facebook enjoys. So it's a risky play for Facebook.
So Rob, if it is a symbiotic relationship as you describe, is there not room for further negotiation that would enable the two to continue with what you've said many participants see as symbiotic? It drives eyeballs onto both websites, doesn't it?
It does, and that's what the code is designed to do. It's a process of 13 weeks of negotiation with a mandatory day's mediation, followed by a very specific form of arbitration, sometimes called baseball determination or final offer arbitration, where the arbitrator can take one of the two offers on the table, not something in the middle, one of the two. And so the risk between the two parties of not getting what they want and getting the extreme of what the other party wants actually forces them into a narrow negotiated outcome, and it is unlikely to actually get to arbitration. It's just a process that says you have to sit down and negotiate, you have to get out, you have to end up with an outcome. You don't have to publish the outcome, it can be a confidential one. It doesn't have to have any dollars attached to it, and that could be part of the confidential settlement. It's just a process to force a negotiation rather than give an option for a negotiation. And that's what Facebook doesn't like.
Yeah. I mean, Rob, is Facebook bluffing here? Because I find it hard to believe they would say, look, we're going to block BBC and the New York Times, but we're going to allow and promote 4chan and 8chan. I mean, that can't be what Facebook wants to, how Facebook wants to be represented in Australia.
It is certainly not how they want to be represented. It's how they will be represented if they execute on this threat. The issue is if they don't execute on this threat... Which is why
I'm asking if it's a bluff. I mean, are they just bluffing here?
I think the issue might be, it could be a bluff if it was just Australia. I think the fact that there are going to be similar outcomes flowing from the EU copyright directive means that actually not bluffing in Australia sends a very big signal to the European Union that perhaps forcing Google or Facebook to negotiate with news media businesses can lead to a bad outcome. So I think it's an Australian threat. It might be an Australian threat that's executed, but the message is much more to Europe.
It's definitely a fascinating topic, and I'm glad you bring Google in there as well, because of course they'll be affected too. Rob, thanks so much for joining us. Rob Nichols, Associate Professor at the Business School of the University of New South Wales in Sydney. Coming up, tensions between Moscow and Berlin escalate as Chancellor Angela Merkel says Russian opposition leader Alexei Navalny was indeed poisoned by a military-grade nerve agent. We'll discuss that next. This is Bloomberg.
Welcome back to the European Market Open. We are just 43 minutes into a trading session here in Europe that sees European equity markets moving solidly to the upside, up by 1.2%. Most sectors in Europe starting off in positive territory, in fact, all of them. If you look at US futures, though, they were negative, now pairing those losses, and NASDAQ futures are still flat, but elsewhere we see E-mini futures and Dow futures pointing modestly to the upside. Let's get a Bloomberg Business Flash for you this hour. Here's Laura Wright.
Thanks, Anna. The White House is poised to set boundaries for its crackdown on WeChat and TikTok. Sources tell Bloomberg the administration is currently debating the scope and will make its decisions public later this month. The Commerce Department is drafting documents to clarify the specific transactions that will be banned. Airbnb has rebuffed an approach by investor Bill Ackman. Sources tell Bloomberg his SPAC, or blank check company, approached the holiday rental firm about a merger. We're told Airbnb hasn't completely ruled it out, but prefers the traditional IPO route. No official comment on the story, but in the past, Ackman has publicly said the company is on his radar. Robinhood is facing a regulatory probe. Sources tell Bloomberg the SEC is looking into if the firm properly informed its clients that it sold their stock orders to high-frequency traders. It's related to disclosures prior to 2018 when it made the information easier to find on its website. Robinhood didn't comment on specifics but says it cooperates fully with regulators. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there in London with your Business Flash. Now, Chancellor Angela Merkel said Russian opposition leader Alexei Navalny was indeed the victim of a crime, sending the ruble tumbling. German tests showed that Navalny was poisoned by a military-grade nerve agent. Joining us now to talk more about this is Elizabeth Braw, RUSI Senior Research Fellow. Elizabeth, thanks for joining us on the program. What does this mean? Because Merkel has had problems with things Russia has done in the past, the annexation of Crimea, other assassinations here in Berlin, for example, but never really done that much about it, and Putin continues.
Yes, good morning, Matt. So Angela Merkel is by personality and by persuasion somebody who seeks dialogue, and that's what she has done over the years, even when she was facing really quite serious issues, including the annexation of Crimea. And sometimes she has taken resolute action, which is what she has done again. And this is almost a sort of a problem that it feels almost casual to say it fell into the Germans' lap, but it was a crime that was committed in Russia. And then as it happened, Navalny was taken to Germany. Now it's the Germans' problem, and especially now there has been found out, it has been discovered by the lab in Germany that it was a military-grade nerve agent, so a chemical weapon. So now Merkel does have to take action, because you can't simply accept as some sort of a given that it will be a military-grade nerve agent, and you do have to take action because it's a substance that's banned internationally. So this is where we find ourselves. So even Merkel, who is a conciliatory type of politician, has to take some sort of action now, which is what she did yesterday, what she indicated yesterday that she'll do.
Elizabeth, Russia obviously has been said to have used Novichok before. The UK government has said that the Russians have used Novichok before. The Russians continue to deny this. Will we see a continuation of previous European strategies or international response strategies, which is around sanctions? I think even the US have given some initial reaction that suggests they could be interested in that route.
Yeah, so sanction is always the first tool that any Western countries use when another country misbehaves and needs to be punished, because it's a relatively easy tool to use, and it doesn't escalate the situation terribly. But the question is how useful it is, and who should be sanctioned. Should it be leaders? Or should it be the whole country, in which case ordinary citizens will be punished for something that really they had nothing to do with, but it's also a measure that is then quite painful for everybody, and it may make ordinary citizens think that maybe it's not worth keeping these people in power. So it's a really tricky situation, and we should remember also that Russia is sometimes a partner of, especially the European Union. For example, when it comes to the Iran nuclear deal, Russia and China are partners of the European Union, and America is on its own. So the European Union, especially now led by Germany, does need Germany as a partner, does need Russia as a partner.
Well, and don't forget, of course, that the European Union and Germany are in big business with Russia, right? They want to pay Putin tens of billions of dollars a year in order to get his gas down through the Nord Stream 2 pipeline. Is that going to go ahead?
So that is the big topic of discussion now among German politicians. So it's not a political project, and the German government has always said this is a commercial project between commercial companies in Germany, Russia, and other countries, other European countries. But of course, it does require political approval. And just the other day, the Danish government reluctantly gave its approval. So the gas pipeline will pass by the Danish island of Bornholm, which is why the Danish government approval was required. And just hours before this announcement about Navalny, Merkel had said that yes, we want the pipeline to go ahead, Nord Stream 2 to go ahead. But of course, then came the discovery that he had been poisoned by Novichok, and that puts this into a completely new light. Of course, one could still claim these are two completely different things, but politically, I think it would be very difficult to argue that Nord Stream 2 should go ahead, even as Germany is having to treat domestic victims of Putin who have been poisoned by a toxin or a nerve agent that's banned internationally. So I think Nord Stream 2's future looks a bit more unlikely today than it did yesterday.
Okay, yeah, really interesting. Interesting to see to what extent the Germans managed to keep those things separate, or whether Nord Stream does get dragged into this. Elizabeth, thank you so much for joining us. Elizabeth Braw, RUSI Senior Research Fellow. 8:50 here in London, 50 minutes into a European trading session that's broadly positive. Up next, what is the state of the US labour market? We'll look ahead to the initial jobless claims data. That's set to be released later on today. Certainly a key data point to watch for global investors. This is Bloomberg. Welcome back to the European Market Open. 53 minutes into a positive European equity session. US futures have paired some of their losses as well. So that's worth keeping in mind as we head towards the US trading day. Let's talk now to Laura Cooper from Markets Live team, where she's a macro strategist, of course. Laura, one of the things we'll be watching for is initial jobless claims. And I'm drawn, though, to a piece you've written today about the importance of data, or the way that data that we usually see driving markets isn't necessarily driving markets right now, because we're all hooked on the latest virus news flow, vaccine news flow. So what is the relationship at the moment between data and market response?
Well, I think that the key point is that there really isn't a relationship. We've seen kind of this narrative that the stocks are breaking away from economic fundamentals, and clearly that's the case when we look at data releases and the actual impact that they're having on markets. So typically we would expect initial jobless claims or tomorrow's payrolls to have a significant move in terms of equity markets, but that's just not the case these days, because it's really all about these unexpected vaccine headlines, and any hints of unexpected policy shifts are really what's driving markets. So I think going forward, it really will be a case where we would likely need to see a vaccine in order to get a cleaner read in terms of economic data, and for that to really revive this monetary transmission mechanism that is clearly being broken in markets, just given the fact of really what we're seeing, this rip-roaring rally, despite, weaker underlying fundamentals still.
Well, it's not long until November 1st, and the CDC is getting ready for that day as a vaccine delivery deadline, it looks like. Laura, I want to talk about the big economic number we're going to get out tomorrow. The change in non-farm payrolls typically is a big one for the markets. And I've heard so many economists say, you know what, as long as you're within 200,000, you guessed pretty well. The whisper number right now is 35. Is there room for a lot of volatility around this?
Well, I think certainly that has been the case over the past number of months, just given the fact that we are coming out of this unprecedented economic collapse, which is very difficult to try to forecast numbers going forward. And I think really typically we would look to initial jobless claims as some kind of gauge on the firing side of the equation. But what's likely to happen going forward is that more people could potentially drop out of the workforce. We are seeing this, fragile labor market backdrop. So that doesn't really give any indication of what we're going to see potentially tomorrow. Now, I think ultimately we are going to see just a slowing pace of hiring going forward. And the real risk is that we're going to see more permanent job losses going forward, and just the capacity of how much more stimulus could be needed to try to salvage this recovery that's being priced into markets.
Okay. Thanks very much, Laura. Laura Cooper, Bloomberg Markets Live macro strategist. Just time this hour to tell you that the Germany August services PMI number has come in ahead of the prelim number, 52.5, so in expansion territory. Surveillance is up next. They'll keep watching the strength in these European equity markets. This is Bloomberg.
Chipping into the trade war, China is planning a sweeping set of new policies to develop its semiconductor industry to counter Trump administration restrictions. In the green, global stock rally builds after U.S. equities touch fresh highs. And France relaunch. Emmanuel Macron unveils his 100 billion euro stimulus plan. The focus shifts beyond COVID to longer-term problems with elections less than 2 years away. Welcome to Surveillance. I'm Manus Cranny in Dubai. So the global equity rally rolls on, the inexorable roll-up. By the way, we now have some breaking data from the euro area. This is on the PMIs for us here. PMIs of 50.5. The market had preliminarily suggested a number of 50.1. There is your stocks trade. As we saw, the German numbers on services come in at 52.5 from 50.8. So this roll-up in the equity rally is marching on. 100 billion euros for the recovery in Europe. The vaccine narrative, we have a new date, November the 1st. The politicization of the vaccine has never been more prescient. We have a date from the CDC that you will have a vaccine on November the 1st. That trumps any China rhetoric in terms of building up their tech and chip ability. They're going to use the power of the atomic bomb, as they say it, to get there. Yields, by the way, 10-year yields, 0.66, back at the level where they were when Jay Powell spoke. So the global rally rallies on. There is this reluctance by the bond market to reprice with the exuberance of stocks. Roll it over, have a look at the currency markets, because it is about the dollar, or is it about the euro, ground zero potentially of currency wars? The euro has been dropping for 3 days. It's the biggest proportion of the dollar index. Where will we roll down to? Kit Duke says for the moment, you're looking at a level of around 117.60 is the retracement level. Of course, we saw this before, and then we ratcheted back to 125. Cable drops ever so slightly, 133.08. As Ramsden at the Bank of England says, there's room to do more. There's always room to do more and better. Leanne Gerrans is here with your first word news. Leanne.
Good morning, Manners. Germany says tests show unequivocally that Russian opposition leader Alexei Navalny was poisoned by Novichok, the type of military-grade nerve agent used in the Salisbury poisoning back in 2018. Berlin will now consult with its European and NATO allies to formulate a plan. Chancellor Angela Merkel says the world is waiting for answers from Russia.
We are expecting that the Russian government explain this incident. There are very serious questions that only the Russian government can answer, and they must answer them.
Now, UK Prime Minister Boris Johnson is trying to win back trust after a series of policy reversals. His return to Westminster has seen a series of face-to-face meetings with Conservative MPs who are anxious over his handling of the coronavirus crisis. Chancellor Rishi Sunak is also promising there will be no, quote, horror show of tax rises, but he isn't ruling out temporary hikes to pay off that pandemic debt. And China is planning broad support for its domestic chip sector. Sources tell Bloomberg the move is to counter restrictions from the Trump administration. They say Beijing is giving this the same priority it gave to building its atomic capabilities. The policy includes a suite of measures to bolster research, education and financing. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Manus.
Leanne, thank you very much. A bit of breaking news from Amazon. This is going to be a good piece of news for the UK economy. 7,000 jobs are to be created there. So this is Amazon, 7,000 jobs to be created in the UK. As we get a little bit more detail on that, we'll bring that to you through the show. To the rally, the inexorable rally of US stocks, rising to yet another record. The S&P 500, as I said, scored its biggest advance in almost 2 months. Driving the rally, well, it's been the dovish comments from policymakers, the confidence in a broad economic recovery. The US has showed signs of progress, but continues to struggle amid the pandemic. That's according to the very latest Fed Beige Book report. Meanwhile, you have hopes of a vaccine buoying the markets. That's after the US CDC told the states to prepare for a COVID vaccine. It'll be ready on November the 1st, the date just a couple of days before the election. That sets an aggressive goal for the government as it plans large-scale distribution in the fall. Now, President Trump's political future hinges on the response to the virus that has killed almost 185,000 Americans so far. Joining me this morning is Ian Steely, International CIO for Fixed Income at JP Morgan Asset Management. Ian, great to have you with us this morning. Thank you for joining us. So the market at the moment seems to be leaning onto the vaccine narrative and ignoring what is quite demonstrative rhetoric from China in regards to battling on the tech front. It is the vaccine narrative that's the ultimate alpha here, isn't it?
I think the vaccine narrative is important, but of course, as well, it's the central bank narrative, as you mentioned, and the news that we got last week from the Federal Reserve that we are likely to be in a very easy period for the foreseeable future, and question marks around whether through the previous cycle some of the hikes that were put in place would have even occurred under this new framework. And I think that combined with the vaccine narrative, combined with some of the economic data looking a little bit better, is really fueling this rally in risk assets at the moment.
But it also drives the steepeners, and here's the conundrum. Let's deal with the steepeners first of all. You've got 530s moving higher. You have this momentum which gathers pace. You say that continues, but where is the inflection point for the Fed in terms of their tolerance for steepness?
So there's a question as to whether the steepness occurring is actually saying that the market believes the Fed to be credible. If they do believe that this new mandate is going to allow inflation to pick up over the longer term, then actually the curve should be steepening up. But I would agree that there's going to be a limit to where they would like it to be, because we are still in a very high unemployment environment. We're still in a very challenging growth environment. And that's an area where you do want bond yields to be low. So at the moment, we've been, say, for the 10-year part of the curve, we've been in a 60 to 80 basis point range, really, for the last few months or so. That could easily move up towards, say, the 1% handle if we did get good news around a vaccine and the positivity around that. But I think the Fed would push back on that. They do still want overall funding levels in the US to be low, and that's good for governments, it's good for people, good for corporations, and I think that will also be part of their focus.
Now, you mentioned the magical 1% level. This is where our analysts have done the data calculation. At 1%, you'd be delivering a drawdown in equities of around 8 to 13%. If you went to 1.25%, you're looking at the equity market coming back. Which do you think upsets the Fed more? Rates at 1% or a correction in equity markets could be healthy for the Fed? So I'm just trying to balance the two in my mind.
I don't think the Fed would really want a particularly big correction in the equity market, because that would basically remove some of the confidence that obviously is building in the US economy. I think that's really what they're trying to install, a big level of confidence. And with the stock market at levels it is at the moment, people are seeing the positivity around that. So I think any collapse in that would be seen as a negative by the Fed. I think also what's interesting is obviously on the fiscal side, we haven't had maybe some of the news that we were expecting regarding the fiscal side. And again, if we started to see a big collapse in the equity markets, it could encourage the governments in the US to look back at fiscal negotiations and maybe get something on the table there.
Okay, well, we could end up with that skinny deal all the way around, and that could be a market risk. Ian Steely, JP Morgan Asset Management, stays with us to continue the conversation. Coming up on the show, Bloomberg has learned that China is planning sweeping measures to develop its domestic chip industry. We discuss the exclusive story, the trade tensions between the world's two biggest economies. That's next. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics is Bloomberg Surveillance. I'm Manus Craney in Dubai. Let's get you up to speed now with your business flash. Leanne Gerrans is with me in London HQ. Leanne.
Morning, Manus. The White House is poised to set boundaries for its crackdown on WeChat and TikTok. Sources tell Bloomberg the administration is currently debating this scope and will make its decisions public later this month. The Commerce Department is drafting documents to clarify the exact transactions that will be banned. Now, Sanofi is starting human trials of its COVID-19 vaccine after early-stage data impressed the drug maker. It brings it one step closer to late-stage clinical trials that it aims to start before the end of the year. The shot, being developed by Sanofi and GlaxoSmithKline, is one of more than 175 coronavirus vaccines currently in development. And Robinhood is facing a regulatory probe. Sources tell Bloomberg the SEC is looking into if the firm properly informed its clients that it sold their stock orders to high-frequency traders. It's related to disclosures prior to 2018, when it made the information easier to actually find on its website. Robinhood didn't comment on details, but says it cooperates fully with the regulators. And that's your Bloomberg Business Flash. Manus.
Leanne, thank you very much. Let's get the latest on the trade tensions between the world's two biggest economies. Bloomberg has learned that China is planning a sweeping set of new government policies to develop its domestic semiconductor industry in an effort to counter restrictions by the US government. Beijing said it's preparing broad support for so-called third-generation semiconductors over the next 5 years. The ambition is high. Ian Steely is with JP Morgan Asset Management. And you morning and you read headline on I suppose, the divergence and the pressure between China and the United States of America. I want to sort of bring it straight back to the bond markets and the rates market, because the data from China is by far better than the rest of developed markets. I wonder, does that move PBOC to a more neutral position relative to Fed, relative to G10?
It's a good question, and obviously the virus was much more in China at the beginning, and they shut down very quickly, and they've managed to get their economy back up and going a lot sooner. But what we've been very interesting that we've seen from China over the course of this year is that they haven't done the same monetary policy easing with interest rates that have happened across the G10, and for that reason, we've still got Chinese government bond yields up around the 3% level. So when you compare that to almost every other major government bond market in the world, that yield looks pretty enticing. And I think that's going to drag investors into it over the coming months. And when you combine that with the fact that the Chinese government bonds are finding their way into the Barclays Bloomberg Global Ag Index and also the JP Morgan Emerging Market indices, then there's going to be this real big foreign demand for it. And I say a 3% yield compared to a lot of other government bonds is a pretty good one at the moment.
Does that shore up the currency even more? I mean, we've debated this in homage to Anne-Marie Horden, who I know is tuned in, this Bermuda Triangle that we've been trying to break out of. You know, does the flow of money on the rates differential, I suppose, just add another layer to the currency narrative?
If you do get that flow of cash into China, both from into the rate side and also into the equity side, then yes, that is going to be just another area that is supportive for the currency. And obviously, we've seen the currency do very well, but that's more really a case of dollar weakness relative to Chinese strength in a sense. And if anything, the strength that we've seen within the renminbi was a little bit lagged compared to areas like the euro. It was really the euro moved first, then China has followed.
What do you make of the turnaround in the dollar? To me, it smacks of just a momentary repricing, overstretched, overdone. It's a bit like an overtired child on the downside. Is there something more substantive to it for you?
So I think that the dollar is a really interesting question. That is going to be a hot topic, I think, over the coming weeks, because what we saw was obviously the dollar weakened, and that there was this big rhetoric that, particularly against the euro, the Euro Recovery Fund, the ECB, that they were working together. That was a very positive step for Europe that we hadn't seen before, and also the pickup in cases that we were seeing in US at the same time as cases were coming down in Europe, all really led to people questioning whether kind of Europe had got its house in order more quickly, and that was what was driving the strength in the euro. Obviously, that has shifted a little bit, particularly over the last couple of days now. We've had a bit of jawboning from ECB officials, whether they want the euro up at these levels. As we well know, a stronger currency is deflationary, and we saw a pretty horrendous inflation print out of Europe last week. So questions around whether it is actually a hindrance to the recovery. And then at the same time, you've got those cases in the US coming back down a bit, data looking pretty good, is some numbers earlier this week, at the same time as we're starting to see cases rise again across other parts of the world. So that's sort of US looking a lot worse from a virus standpoint compared to other areas is definitely not as acute as it was a few weeks ago. And I think really that's maybe putting a cap on the dollar for the time being.
Okay, Ian, thank you very much. Ian Steely, the International CIO for Fixed Income at JP Morgan Asset Management, my guest host to kick off your surveillance hour. Coming up on the show, Denmark's biggest bank is the target of a second police probe involving 15,000 customers. We speak to the Director General of the country's financial watchdog. That's next. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Manus Cranny in Dubai. Now, Denmark's biggest bank is the target of another probe involving police. That's after it emerged that Danske Bank may have misled the country's financial watchdog about its handling of debt collection errors. 15,000 customers repaid too much over a period of several years. Danske acknowledged the mistake and says it's keeping all relevant authorities informed about the matter. So, joining me now is Jesper Berg, Director General of the Danish FSA. Director General, welcome to the show. 15,000 customers. Some of this goes back to 1979. Most of it occurred around 2004. 15,000 customers, 100,000 accounts. Are you worried about systemic issues at this bank at this juncture as you uncover more problems?
No, I don't think this is a systemic issue. I think this is an important issue in relation to how you treat your customers and the confidence of customers in that the information they get from the bank is right. But it's not a systemic issue. Nevertheless, given the things which have popped up in the media, we are looking into whether the things that the bank has earlier told us about what was happening is consistent with the new information which is out there. And when we know more about it, we have a better sense of the scale of the event.
What level of redress is available to you on this kind of issue? Is it fines or other levels of redress, sir?
It depends very much on what specifically has happened. If what they've told us earlier is consistent with what they knew, then and then they're handling the issue, then there's not a lot which we can do. But one of the big sins within banking supervision, and that is true in Denmark as well as in other countries, is that if you haven't told the supervisor the truth. We don't know whether that's the case here, but that's a big issue because as a supervisor, you are enormously reliant on that institution you supervise tell you the truth. And that's why when you have issues popping up in relation to that, the steps which could be taken are quite draconian, including police investigations and possible prison sentences.
Okay, do you believe this bank has enough capital to prepare for any penalties and that they may face? Are you happy with the capital level at Danske?
Yes, we are. I mean, this is not a capital level issue. This is a consumer affairs issue, so it's serious in a different dimension than capital.
Danske Bank CEO is asking for a joint response investigating the money laundering, including those from Denmark and the US. Can you update us on that?
Yeah, the story goes back again many years. The new management has started a process in terms of handling these issues. Money laundering, the fine levels are potentially more serious, but both in Denmark and the US, there are limits so that you do not want to endanger an institution's solvency in relation to these issues. The bank has set aside pretty substantial funds in relation to paying the fine. I'm sure discussions are going on with various institutions in Denmark and the US in relation to settling that issue. And clearly, as a supervisor, we can only look forward to that issue being put behind us.
Jesper, thank you so much for joining me. Jesper Berg, the Director General of the Danish FSA, on the very latest with Danske Bank. Coming up on the show, Emmanuel Macron's government unveiled the long-awaited 100 billion euro stimulus plan. We discuss the plans. This is Bloomberg.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, and politics. It's Bloomberg Surveillance. I'm Manus Cranny in Dubai. To the UK PMIs, we're just waiting for those to cross. If you look at sterling, it's repriced by 0.8%, nearly 1% over the past 2 days, as Ramsden at the Bank of England really talks up the possibility of plenty of capacity for more easing. As we get those numbers, we'll bring those to you. Let's, in the meantime, get across to Liang. You know what? Let's just pause for thought. We have the numbers. Services PMI comes in at 58.8. Now, that is down on the previous month and certainly below the survey. So 58.8 on services, 59.9 on the composite. Again, below the estimate on the UK CPI. So we are just seeing these numbers come through. And as I say, sterling has just repriced ever so slightly. So services below estimates there. The flash reading was 60.1, 58.8 is where we are. Now, in terms of the overall index, 58.8 from 56.5 in July. It is the highest reading. It's the second consecutive month of expansion. Of course, we're seeing the rebound, the reopening. New business rises to 58 from 54.3. That's the highest reading since December 2016. It's the second consecutive month of expansion as the UK lurches into reopening and hotspot close downs. There's cable for you thus far on the day, down 0.4%, 132.94. We will, of course, what's really driving the narrative on sterling is more so about the dollar strength. But Ramsden coming out and saying we've got plenty of room, plenty of capacity to do more on the QE side. And the governor, Mr. Bailey, of course, reiterating the risks on the downside. She's there, she's ready. Leanne Gerrans, the PMI's got in the way. Take it away. First Word News. Good morning.
Manus, good morning and thank you. The US economy has showed signs of progress but continues to struggle amid the pandemic. That's a readout from the Federal Reserve's latest Beige Book report. It sees childcare access as a major roadblock for getting people back to work. ADP data released yesterday estimates private sector payrolls increased by just over 420,000 last month, less than half the amount actually expected there by economists. Now, in the US, the Centers for Disease Control and Prevention is telling states to prepare for a COVID vaccine by November the 1st. That's actually days before the election. According to a letter seen by Bloomberg, the CBC is preparing for large-scale distributions in the autumn. That's a loftier aim than in August, when it said limited doses could be available. And Netflix is adding some royalty to its roster. Prince Harry and Meghan, the Duke and Duchess of Sussex, have signed a production deal with the streaming giant. They'll produce a wide range of content from children's programs to documentaries. They're the latest global celebrities to sign on with the company, joining the likes of Barack and Michelle Obama. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Manus.
Leanne, thank you very much. Now, Emmanuel Macron's government unveiled its long-awaited 100 billion euro stimulus package. The French president is betting on the plan to transform the economy with less than 2 years to go until the elections. The stimulus, dubbed France Relaunch, includes wage subsidies, tax cuts, and funding for environmental projects. Vincent Chagnou is the head of research at Generali Investments. Vincent, great to have you with me this morning. So here we go. This is Macron's big political play. But if you take the stimulus package from the pan-European response, plus the French narrative of 100 billion, does it recast any of your thoughts on risk for Europe?
Good morning. Well, not really. I have to say this plan was expected. It's not very surprising. That's 100 billion split over 2 years. That's about 4% plus of GDP, but split over 2 years. And very clearly there is a focus on job, on competitiveness, and the green transition. Some could argue that not enough is done for consumption, but I think the focus is going to be on investment and employment. So overall, it's welcome. You know, the funding will be clearly facilitated by the recovery fund, where France is going to get about 50 billion in grants, plus loans. So overall, this is fairly consistent, not too surprising, and very clearly, President Macron is trying to give a bit of a boost into the April 2022 election.
Well, let's see. It sounds as if you're underwhelmed by the 4% number, Vincent. The title of your global view is COVID paralysis recedes and political risk rises. How do I hedge the politics? I presume it's a US political risk. And how do I add more value for the receding paralysis, as you call it? Just take me through the two narratives there.
No, on the COVID crisis, obviously, you need to be very humble. No one knows exactly how the situation is going to evolve after summer, but there is, you know, some positive notes whereby the progress on the vaccines are very fast. I'm not going to pass a judgment on whether it's a good thing that the development phase are reduced so much, but that clearly is going to help reopen the economy. The hospitals, I think, have better protocols now, so mortality seems to be falling. So you know, we need to be very humble, but the worst is not for sure. I think the focus over the autumn may be more on the political situation, not just the US, actually. We also have the Brexit discussion, which needs to be completed by end October, and I'm afraid that there is not enough time left for a grand deal. So it's going to be a very small deal, if any. And then we have the US election, where the biggest risk maybe is that we would have a very tight result, and that result could be contested, and then leading to gridlock for quite some time. So there are risks there, but I think, you know, those are very hard to predict by definition. But otherwise, I think the story is that of an ongoing recovery, that of ongoing support from central banks. You know, we're hearing from the Bank of England, for example, we are going to get more support there. The Fed has just announced quite a significant change in its objectives. I think that's very significant. So I think we can position for a rotation towards the cyclical recovery. That thematic, I think, should support some of the cyclical assets.
So you're an advocate. I mean, we saw this shift in the ETFs. We're going to talk about it in just a moment with one of our reporters in terms of out of growth and perhaps to reconsider value. That narrative holds for you. Is that something that grows in momentum, and should it be dissected?
That's correct. I mean, the equity market has had you know, quite a remarkable rebound. If anything, our bias remains positive, but of course you've got to look at valuation, and the multiples, at least by some measures, are very high. So the purely directional move is not going to be easy from here. The bias is to the outside, but I think there's more value in trying to effectively pick the right sectors. And on that side, I think that the value side remains, you know, probably not a good bet because yields will stay low. But the cyclicals have started to outperform defensives, and I think there is more room there as the economic recovery is being confirmed.
Okay, and I know that you like a high-quality bucket of credits, but we'll touch on that the next time, or certainly Francine will when she speaks to you soon. Vincent, thank you so much. Vincent Chagnou, Head of Research at Generali Investments. Coming up, Tom Cruise's latest stunt is traveling through London and sitting dying in a cinema to see Tenet. The first blockbuster released since the pandemic, but will it be Mission Impossible at the box office, or will the public return to the movie theater this weekend? We discuss. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Manus Cranny in Dubai. Grab your popcorn and a mask. Christopher Nolan's long-awaited blockbuster Tenet, delayed due to the pandemic, is released in some parts of the US today and China this weekend. That's after a debut elsewhere in the world last weekend. And we've been speaking to the IMAX CEO, Rich Gelfond, about the industry.
One thing that Warner Brothers and Tenet did, which was really intelligent, was instead of the traditional pattern where you'd wait for the whole world to be safe and then you'd open the world day and date, they said, wait a minute, there may never be a time that it all works perfectly. So let's do a rolling global opening and let's open where it's safe and continue to roll through the world in doing that. And right now that seems to be working. And the hope is that that gives comfort to some of the other studios and the other films, and they open in a similar manner.
Joining me now is Danny Berger. How did Tenet do at the box office? It opened here in Dubai last weekend. So what were the numbers like?
Well, Manus, I don't know if you were one of the contributors or not, but it did pretty solid internationally, getting about $53 million on its debut. Now, in normal times, that would be kind of whatever, maybe a disappointment, especially because this is a Christopher Nolan film, but we're, of course, not in normal times. So it's solid numbers we're looking at here. We can't say, though, okay, people came in to see Tenet. They think movie theaters are safe. They're willing to come back in. Again, this is a Nolan film. It has a built-in captive audience, so people people are willing to go see it. Now, in terms of the movie ecosystem as a whole in theaters, we did see movies like, for example, New Mutants. It's from Disney. It was widely panned. It delayed its release a bunch of times. It did pretty poorly, only about $7 million in the US, $10 million internationally. So the key here seems to be if it's really big name, be it the director, be the actors, if there's a lot of hype around it, it could get people to come see it. Disney doing a kind of a weird approach shows how just strange the times are. Mulan is set to be released this weekend. Manis, if you want to see it, which I'm skeptical if you're going to, not only do you need a Disney Plus subscription, you need to pay another $30 to go see the movie. Disney hasn't said whether this is the strategy going forward, but certainly going to be a big test if these major movie houses are now going to flip more towards streaming during these uncertain times.
I have been known to hum a Disney tune. Danny, thank you very much. Danny Berger there with the very latest on the cinema numbers. Now, let's bring in a CEO who knows a thing or two about movie going. It is Moki Gredinger. He joins me now, the CEO of Cineworld. Great to have you with us this morning, Moki.
Hi, good morning.
Getting back to normal, we're all trying to understand what that means. When do you think you can get back to 100% capacity? Will you ever get back to 100% capacity without a vaccine?
No, I think we need to differentiate between two periods. First is the one until the vaccine, and then after the vaccine. So after the vaccine, there is no doubt we are going to go back to normal. We will do the results we were doing, and in some cases even better. Just to remind all of the people that are talking now, so worrying about the cinema industry, that just in 2019, we had the biggest year ever in the industry, grossing $43 billion around the world, a record year. No reason why not. We see a very warm comeback to the cinemas by our audience. Of course, the more regular visitors are coming earlier. But and I might even say, you know, that I heard the remark about the $53 million box office of Tenet. I think it is an amazing result. We need to remember that this is without the US, and I think it is somewhere in the region, allow me to guess, about 30% more than Warner have expected. And I think this went well. Mm-hmm. It's true with that some territories with the limited capacities, we had many sellout shows, and this shows us that probably this weekend is going to be strong because people still want to go and see the movie. We need to remember in many places it was the first week of schools, but I think in general we are very encouraged by the result, and we are expecting a strong weekend in the US. We need also to remember that US is still without New York and California, so we have to look at the numbers differently and than in Europe. But in general, I think the good signs are there, and I believe that once we'll get into the next blockbusters, we'll do better and better.
Okay, Moki, but let's think about what Disney has done. They're releasing Mulan on their streaming service. So that is a risk that the studios are going to start releasing some of the high voltage blockbusters on streaming services. How much of a challenge for the business is that? Are you worried about that?
I would say like this, you know, my job being a CEO of the second largest circuit in the world, you know, is to be worried. I think they are paying me to be worried. But to tell you the truth, I'm not worried. I think that, again, going back into the numbers, these movie makers are doing these big movies. I saw Tenet 10 days ago. This is a movie that was only done for the big screen. Same goes for Mulan, same goes for Black Widow, same goes for James Bond and for many others. Mulan was here a special case, and I think Disney in their announcement said clearly that they are fully committed to the theatrical window. Disney is the biggest supplier today of big theatrical movies. And it's true that Disney Plus territories, and I was very, very sorry to lose Mulan in the US and in the UK, but there are not so many territories like this, and I'm sure Mulan will do well in the territories that are opening theatrically, including China, which is the natural for Mulan.
I've got to say, when you do go to see one of those kind of movies in the cinema, it has a completely different experience. Let's get to the business. You've got a big old shareholder there in the business, and there's talk that Liu Zhiwang, his stake bill. Are you talking to Liu Zhiwang about taking the business private?
I haven't changed, and no one in Cineworld Group have changed even one word with this new investor. We were happy to see that they are growing their shares. We were a bit surprised to see yesterday a note from them that they sold some of the shares that they have bought, but we had no contact with them. And of course, they are welcome to contact us if there is a need, but we have no.
Morning, everybody. I'm placing an order to sell short Japanese yen. The price I'm placing on is 106.253. Order placed to sell short and at 106.253.
Now, but this is only natural for a business that have been closed down for 6 months. We truly believe in the business. We are, as you know, I think, third generation in the business. We just had the 90th anniversary since our grandfather have opened his first cinema, and we are not going anywhere.
No, you're not going anywhere, and we know it's your iPad, so that's good. That's good. We've got identity definition for you, Mookie. Have you drawn on any credit lines? How big is your, I suppose, defense chest if we go into a second wave? Have you drawn on credit lines? Have you built up any additional debt holdings at the moment that you can tell us?
Yeah, we are well positioned for a second wave. We are in a good position. Of course, I cannot reveal direct details being a public company, because once we announce, we need to announce. But we are in a well position. You know, if you followed us, that early July we have raised 2 lines of credit, total of about $350 million. This is a very good, solid amount, but we have other possibilities and other sources if we need. My guess is that November we are going already to be operating relatively strong if there will not be a great deterioration. And somewhere in January, February, there will be a vaccination and we will be back in full force. But we are ready if this will not happen, and we are preparing ourselves all the time with a few months ahead in order not to be under any stress in the last moment.
Mookie, we wish you well. Thank you for joining us this morning on the bookings and the look ahead for movie-going.
Thank you very much.
And soda all the way. Mookie Gredinger, the CEO of Cineworld. I love a night out at the movies. Now, coming up on the show, Daimler unveils the very latest version of the Mercedes S-Class. It includes an all-electric vehicle. Traditional car makers play the catch-up game with Tesla. We hear from the German automaker's CEO. That's next. This is Bloomberg.
climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, and politics. It's Bloomberg Surveillance. I'm Menace Graney in Dubai. Daimler has unveiled the very latest iteration of its Mercedes.
Short position open for Japanese yen at 106.253.
Of euros into electrifying their fleets as they play catch-up to Tesla, which zoomed past them to become the world's most valuable car company. Bloomberg's Matt Miller spoke to Daimler's CEO and the trends that he's seen in the industry.
We're investing in electrification, going CO2 neutral, new software architectures based on artificial intelligence. We have fantastic styling and a luxury brand. If that market cap can serve as an inspiration to build on that, then we should be quite optimistic about what's possible.
CEO there of Daimler speaking to our very own Matt Miller. Electrification all the way. Markets are debating what is the right narrative. How do you trade when you're trading at record highs around the equity market? It is about the vaccine narrative. You've been given a date now in the United States of America, which is November the 1st. You will receive a vaccine. Stocks in Europe fly higher by 1.1% as the euro trades just a little bit lower again this morning. So it is the vaccine narrative that really is I suppose, driving the thinking. China says they're going to go all in on battling on the chip front. S&P futures flat at 35.77 as France goes for 100 billion euros in stimulus. We're up 1.1% on European stocks. Roll it over, have a look at what I would say are the foothills of a very modern currency war. The euro is lower, the dollar is just a little bit better bid this morning, making a comeback. Euro dollar 118.32, but is it a head fake? ACA 2017. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, the blizzard of stories that makes up this most odd end of summer today claims tomorrow unforecastable jobs report that is, quote, a tough call. There is dollar strength, yields sort of lower, the VIX doing odd and strange things. Is anyone out there? Yes, they're driving the Dow back over 29,000. And how odd, President Trump, he says vote early, vote often. Vice President Biden says vote once, and quote, as early as you are permitted. Good morning, everyone. Bloomberg surveillance as we stagger to the end of the summer. Anna Edwards with us, Francine Lacroix doing what I did yesterday, which is, moving cherubs, migrating cherubs to school. How about that back to school thing, Anna? It is bizarre on the island of Manhattan.
It's bizarre everywhere, I'm sure. A few more face masks than is usually the case, packed into school bags globally. Yeah, I've yet to do that. That joy awaits me tomorrow, Monday, into next week.
Yeah, it's going to be interesting to see. We're all dealing with it here, of course, on team surveillance and across all of Bloomberg, and hope you are getting to the end of summer. Labor Day on Monday in America, Anna, and that's a very late Labor Day on the calendar. Maybe the calendar year actually starts September 14th for the business year. Right now, we start strong with our first word news in New York City. Here's Ritika Gupta.
Morning, Tom. Anna, the timing on this may raise some eyebrows. The CDC has told states that a coronavirus vaccine could be ready by November the 1st. That's just 2 days before the presidential election, and it's an aggressive goal that would depend on shots being tested and reviewed by then. President Trump's political future hinges on the response to the virus that has killed almost 185,000 Americans. And new polls show Joe Biden leading President Trump in 3 swing states that the president won 4 years ago. According to Fox News, Biden has the edge in Wisconsin, North Carolina, and Arizona. In all 3 states, Biden shows strength among women and suburban voters. Secretary of State Mike Pompeo has imposed new limits on Chinese diplomats in the U.S. The curbs have to do with visits to college campuses, meetings with local officials, and cultural events. The U.S. is taking the steps to match Chinese limits on American diplomats. And the Federal Reserve says the U.S. economy is showing progress, but some uncertainty persists as the central bank's Beige Book report says childcare access has emerged as a major roadblock for workers. Meanwhile, worries about loan defaults have started to rise in the financial sector. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Anna.
Ritika, thanks so much. Equities, bonds, currencies, and the Turkish lira. Let's get right to it. The Dow futures right now, 29,100 exactly. SPX down 4. 35.75 on the S&P futures. And the VIX, how odd is it? 26.15 on the VIX. The yield market churns. I don't want to say much about yields this morning. I would say dollar flat, but after this recent bout of dollar strength, euro to 120 and pulls back to 118.33. Anna Edwards, I really got to know Turkish lira finally breaking decisively through 7.40, rounded up 7.43 is a weaker lira for Mr. Erdogan.
Glad you brought us the Turkish lira check, Tom. Let's get to the data board I've got for you, which is showing European stocks moving higher, catching up, though, essentially, with the United States. I did put in the bank stocks here, though, for you, Tom, and this really speaking to what you saw in the US yesterday, a broadening in that rally. So we saw new all-time highs, and it wasn't just tech stocks, for once, that lifted things. So I've got this this bank sector in here, just to reflect how we are seeing a pickup in not just travel and leisure stocks here in Europe, and not just tech stocks, rather, but also seeing some of the beaten up sectors, the likes of the banks, doing well. And of course, that bodes well for Europe if we do see a broader range of styles and sectors rallying. NASDAQ futures do look a little gloomy, don't they? Down about 0.4%. We'll keep that in mind going through towards the middle of the session here in Europe. I put the pound in as well, Tom, because I know we're going to talk to Jordan Rochester in a moment, and we've got the pound a little weaker, down 0.3%. Tom, you mentioned the euro weaker, down 0.2%. On that note, let's go to Jordan Rochester, Nomura FX strategist, who joins us now. Jordan, very good morning to you. So what is happening with the euro and the pound now? They're both weaker today against what was a stronger dollar, now a fairly flat dollar. Is this European central banks waking up to the need to talk about the currency, or is that just a byproduct of them discussing openly and honestly monetary policy from here?
Well, morning, Anna. Morning, Tom. Welcome live from my quarantine in the kitchen after a France trip. Well, in terms of your question, the ECB is jawboning the currency. That's what's driven the move over the past 2 days. Jawboning very mildly, I will say. So we've had some comments by the ECB's lane saying that the currency does matter, and it has moved a lot. And we've had a few other comments in an FT report off the record, some of them on the record. I don't think it's that important right now, because for ECB monetary policy, there's one thing that's way more important. It's domestic consumption, thanks to what's going on with COVID-19. The trade aspect will impact their inflation forecast. It will impact their growth forecast. And that's what they're talking about, which is it's not hypothetical, but it seems a bit academic considering the massive hit to growth you get from COVID-19 and the smaller hit to growth you'll get from the currency aspect. It is more marginal than what would happen if we had a second wave, for example. So what my thoughts are is that essentially we've had a massive run higher in the euro, Anna, and we're having some profit taking here, because why not? We've gone from essentially 110.50 when most folks started to get into this trade. We went to 120. We've had a 10 to 12 big figure move depending on where you got in. We had a lot of positioning as well. The euro positioning is very long. You look at the real money, they are extremely long, historically high. So Anna, where do I square the circle here? We've had a big move higher. We've had a bit of profit taking after these comments from the ECB. Next week, we've got their meeting where there's actually some pricing for perhaps a tilt of a dovish turn. Some may be looking for QE to be expanded. Not next week, I would add. Probably more like December for those folks who are looking for that, and 9 basis points of rate cuts priced in over the next 12 months.
Okay, and Jordan, we do like the backdrop to your shot. You know, we've got my living room, we've got your kitchen. We take all sorts on this program. Let me ask you though, where this does start to worry the ECB. So they've been moved to speak, or Philip Lane was moved to speak at 118, 119, 120. But is it really 130 where things start to get messy for European exporters?
Yes, I think if we get to those levels, it is a level where the ECB should be talking about it much more. But Anna, think about it. They don't have the luxury of doing much about this sort of move in the currency. Let's look back to 2017 when they did do a similar thing. 2017, Mario Draghi was starting to be concerned about the rise in the currency. The point I was making at the time is the currency was rising for good reasons, which it is now. The euro is rising for good reasons. Many of them, European growth's improving. We've got the EU recovery fund, the joint fiscal issuance. We've got German fiscal stimulus in big size for the first time in a long time. Many reasons to be optimistic on the euro area. In 2017, they were trying to raise rates. They were looking to normalize policy. They had ended QE. This time around, they don't have the ability to go from what that is, a hawkish stance, to a dovish stance, and that moved the currency lower at the time. Right now, they're dovish. They're doing quantitative easing. They've cut rates. They've got teltros, peltros, the whole shebang. They can't do a hawkish to dovish pivot to move the currency lower. All they can do is just talk about it, and they're in the same position as what the S&B's in. Extreme QE, and the ability to do more QE. But if they do anything less, if they were to try to be dovish, they can't really add much to the fire, is the point I'm trying to make. They don't have the sort of benefit of a hawkish to dovish pivot. They can only be more dovish than they are now, and that's kind of hard.
Jordan, you mentioned quarantine, and I've been looking at trade statistics. I actually looked at the trade balance, folks, for the United States, which has really deteriorated off of a little rebound recently. That data out today or tomorrow. Jordan, what does quarantine do to the decline of world trade? I mean, if you've got restrictive process, if you will, within the United Kingdom and for that matter around the world, what do you think world trade will do, and what will it mean for the dollar?
Well, Tom, we've had essentially a big change in globalization over the past few years thanks to Donald Trump's sort of stance towards China. The growth in globalization has slowed. The question is, does it reverse? And the problem is the data we're looking at today, just using the last couple of months, it's very noisy. We won't know the true outcome of that story. But what I can say is, look, you're in quarantine, so you're at home, and there is still signs of retail sales doing well, just online shopping. For retail sales, we've seen the US pick up. So it doesn't seem clear to me that globalization is over. Its growth has just slowed, and there's going to be a detachment away from China towards different Asian economies.
I mean, I look here at the call here. There's got to be an opportunity now into September and October within the noise. What is the Jordan Rochester call within the noise?
Well, Tom, we've got essentially a second wave risk coming up. I think the UK is probably going to be one of the ones that stands out over the next month or two, Tom. Why? The UK has essentially been trading quite well. If you look at the pound versus the dollar, it's pretty amazing how high we are given the risks ahead. The risks ahead are, Tom, we've got the furlough scheme ending in October. Most European countries have carried on their schemes into 2021. So the UK will stand out with a big unemployment spike in November. You've got Brexit talks. Did you see Michel Barnier's comments yesterday? He really amplified the rhetoric that absolutely no progress has been made. And if anything, it seems to me the stalemate's getting worse with emotions running high. So we've got talks next week. We've got talks pretty much every week into October. At the end of this month, Tom, we'll start to get legislation from the EU as to what a no-deal Brexit will mean. So I think short pound in the month or two ahead will be one of the trades that does eventually work.
Well, one of the headlines here is maximum yen stasis. I mean, a 106 on yen, and maybe it's a 105 on a given day as well. Reaffirm your yen call, please.
Well, we've got Abe resigning. So that's been the big story of the past week or so. Well, Tom, we're looking for essentially yen weakness, and that kind of stands out. Folks think maybe Abenomics is over, but you're seeing the contenders for Abe's position talking about continuing Abenomics, so that hasn't materially changed. When it comes to the yen, the balance of payments has also significantly changed since the global financial crash, Tom, so you're not going to see big yen inflows. So I think the story is yen's been very range-bound for several years now, but we can expect its underperformance versus the likes of euro and the likes of Aussie. So I'm talking a sort of 1 or 2% depreciation over the next month or so. It can maybe go further if we see Abenomics with whoever succeeds Abe accelerated.
Are you very interested in some of the detail around the stimulus programs that we've got from various parts of Europe then, Jordan? That's caught quite a lot of made quite a lot of headlines in this part of the world. The French stimulus in particular making waves today. Does this add to your what does this do to your expectations around the euro in particular versus the pound, where you draw attention to the fact that we do see the end of the furlough in October?
Well, in terms of the French headline today, 100 billion euros or so. Most of it was announced over the summer. It's just nice to see the final details today. The German numbers earlier this year were fantastic. The question is whether we see a similar round if we have a bad second wave of the virus. That'll be the big question. The question I have is, do politicians start to say, we've done as much as we can, we've done enough, it's up to the markets now to handle it? That is a big question mark for this winter. If they start to talk like that, you've seen some of that in the US fiscal debate, hence why nothing's been agreed yet. You could start to see risks start to suffer, and the moves in equities we've had maybe are a bit more questionable. In terms of the UK, they've had a big fiscal stimulus. Stamp duty reform has been fantastic in terms of boosting the housing markets. That really has encouraged the housing sector, but other sectors are struggling. So what I think, Anna, is essentially from November we have a cliff edge with that furlough scheme coming to an end, and the budget. So when the budget happens, roughly around October, November, we're talking about tax rises perhaps for corporations. So the UK asset class might suffer even further if Sunak was to take that stance and start to raise corporation taxes just when we're in the recovery phase.
Yeah, saw the French cutting theirs. Jordan, thanks very much. Jordan Rochester of Nomura stays with us a little bit longer here on the programme. And coming up on Bloomberg Markets later on, Bill Ackman, Pershing Square Capital's CEO. That'll be really interesting after the headlines around Airbnb this week. That is at 1 p.m. in New York, 6 p.m. in London. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Bloomberg Surveillance. Good morning, everyone. Anna Edwards in for Francine Lacroix. I'm Tom Keene in New York. And with us, Jordan Rochester of Nomura. Jordan, one of our themes here going into Jobs Day claims today, folks, at 8:30, and then Jobs Day tomorrow. We will go beneath the headline data. Is a decline in aggregate demand. What is the history of what the U.S. dollar does if you see a decline in global aggregate demand?
Oh, that's a tough question, Tom, because it's always relative in foreign exchange. But if the US is seeing a decline in global demand, but the US is outperforming, then the dollar strengthens. And that tends to happen in recessions where the US quickly bounces back versus European peers. In this scenario, it's a bit different because COVID-19 is more prevalent in the US and dealing with the US election in the months to come as well, Tom. So I actually have the view that you're seeing a fall in global demand, but not so much in Europe versus the US, where it's suffering from the higher case count of COVID. So in this case, it's why the dollar's weakening. And I think that still plays out in the months ahead.
I mean, the currency barometer here, and the word I'm using today through the script, Jordan, is odd as well. Where's the odd bet right now in foreign exchange? It's always a one-way bet somewhere. Is it stronger in Minby? Is that the odd bet right now?
It's not an odd bet because what's happened between the US and China is we had that phase one talk sort of negotiation in early part of this year. The COVID-19 crisis happened. We had a lot of talk from Donald Trump about how he was going to make China pay for that. And then we had the phase one sort of evaluation just 2 or 3 weeks ago. And essentially, the US and China said everything's tickety-boo, keep going. So what that says is we can expect very little to come out of the US administration against China on trade into the election, perhaps the administration not wanting to ruin the rise in the S&P and other equity indices, Tom. So I think the Chinese renminbi strength here is part of that story. Broad dollar weakness, China outperforming as well, domestic consumption looking healthier than elsewhere. So no, I don't think that's the odd one. I guess I've already mentioned this morning, the odd one for me still remains sterling, why it's performing so well. And actually in other currency spaces, so like Australia, the Aussie dollar not really rising as much as other currencies, such as the euro, for example. So there's definitely some high beta plays that are no longer high beta, and we have to get used to that new world.
Let me ask you about some other currencies that have done well this year so far. And I know it's been a topsy-turvy year. It's been a year of downs and ups and downs. But, Jordan, we've got the Scandinavian currencies doing pretty well, actually. The Swedish krona, the Danish krona, the Swiss francs in there also for good measure. Do you expect a continuation of that to year-end, or does something change?
It's a continuation, Anna. I mean, NOK, the Norwegian krona, was one of the biggest sells earlier this year during the sort of coronavirus crisis for markets in March and April. You had the oil price crash as well. We had negative oil prices, something we've never seen before. So the NOK's balance of payments really got hit. But since then, we've seen a massive big swing higher back again to more relative normal prices for oil. And Norway's fiscal stimulus as well, help from the pension fund taking place. So Norway is one of those illiquid G10 currencies that when good times are good, it does well. And the same with the Swedish krona, but to a lesser extent. Some of the question marks have been, why hadn't the Swedish krona moved more? In terms of the Swiss franc, that's the different one, actually. If you're asking for a short out there, I think selling the Swiss franc, buying the euro, or buying the likes of Noki Stocky works quite well, given the Swiss franc still remains relatively strong, and dollar Swiss looks to have done a turn here.
Euro Swissy again range bound as well. Jordan, what is not range bound is Turkish lira. It's extraordinary. We've been waiting on a 740. This morning we get some significant weakness through to a 7.43. At what level does it unravel for Mr. Erdogan?
I mean, Tom, it's hard to say with Turkey. It's very volatile. What we can say is the foreign exchange reserves of the central bank are looking pretty weak here. In some measures I've seen, they're even net negative after contracts will settle in a few months. So I'm not a Turkish expert, but it's something that I wouldn't be looking towards in any of my G10 cross trades.
Huge distressing chart. Jordan Rochester, thank you so much there for an across many foreign exchange pairs brief as well. We have claims at 8:30 and then on to jobs day. And one of the areas of the American economy really in true strategic and tactical change is retail. We are thrilled to bring you this morning the gentleman that made the modern Saks Fifth Avenue. Steven Sadov will join us in the 7 o'clock hour. Stay with us worldwide from London, from New York. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
surveillance, I'm Ritika Gupta. Let's get your Bloomberg Business Flash. China is taking steps to counter Trump administration restrictions on semiconductors. Beijing plans a sweeping new set of policies to build up the domestic chip industry over the next 5 years. Bloomberg has learned that the Chinese government's putting the same kind of priority on the effort that it gave to building its atomic capability. The SEC is investigating Robinhood markets. Bloomberg has learned the question is whether the online brokerage informed clients that it sold their stock orders to high-frequency traders and other Wall Street firms. The probe has to do with Robinhood's disclosures before 2018, when it made it easier to find information on how it made money. And a group of buyout firms reportedly has made a takeover offer for railroad operator Kansas City Southern. According to Dow Jones, Blackstone Group and Global Infrastructure Partners made the bid after a previous offer was turned down. Kansas City Southern has a market value of more than $17 billion. That's your Bloomberg Business Flash. Tom, Anna.
Ritika, thank you very much. Ritika Gupta with the Business Flash. To the data then, and Tom, we see European equity markets up by just shy of 1%, off session highs, and we see that on Nasdaq futures as well. So Nasdaq futures take another leg to the downside, down around 0.6%. The banking sector in Europe fairly resilient. The pound, though, on the back foot as we approach the end of the year, and a trio, as we were hearing from Jordan earlier, of issues for the UK economy.
Yeah, very, very interesting with Jordan Rochester there. The data right now is a churn. I'm really hesitant to give you a direction on it. I got red and green on the screen. The VIX 26.25. Bonds, same thing. Yields up a little bit fractionally, but again, I don't want to oversell that. I would point out it is a Turkish lira in retreat, 7.44 lira per dollar. On our politics in America, Jacob Parakilas of LSE next.
Nós aqui do Brasil, eles querem proibir nós na mineração, produzir a mineração, né? E vem as empresas, grande empresa que nós aqui do Brasil não tem condição de trabalhar nela, eles pegam, tiram o minério e levam quando eles querem. E nós no Brasil aqui, que mora aqui no Brasil, nascemos no Brasil, e fica sem a nossa produção.
Sou pai de família, né? Eu tenho filhos estudando. E eu não posso me acovardar ao ponto, né, de deixar a minha filha passando necessidade ou a minha esposa passando necessidade. Então a gente se precaver, vai fazer o quê? A gente vai esconder, a gente vai correr deles, né, enquanto tiver perna. Agora desistir nunca, a gente vai continuar trabalhando, porque eu preciso sobreviver, eu preciso dar o sustento para a minha família.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
What
you need to be watching on Friday. The main event, U.S. payrolls report closing out the week. It is a big week.
Good morning, everyone. Bloomberg Surveillance. Tom Keene in New York, Ann Edwards in for Francine Lacroix in London, which is a wonderful thing this morning. And also wonderful is to get European perspective on the American election. We do this within the jumble of the markets and, of course, the labor economy in America. We'll get some good snapshots on that over the next 2 days. Jacob Parakilas is at the London School of Economics and their Ideas Associate as well. He is a student of this American politics. Jacob, in our preparation for this, I love the phrase you said, know what we don't know. What don't we know right now about this campaign, about these two candidates?
Well, we know almost everything there is to know about the candidates. What we don't know is what the impact of the pandemic will be. This will be an election that will be carried out largely by mail in a way that's unique amongst American elections. And we've seen Donald Trump, in response to that, cast doubt, without foundation, I should say, on the integrity of mail ballots. And his Postmaster General has sort of instituted cuts which may impact the timely delivery of mail ballots. So we don't know about the circumstantial issues surrounding the election. We also don't know what issue is going to be prominent in the couple of weeks leading up to the election. COVID has really dominated most of the year, but it's taken back seats at various points behind, particularly issues around police, racism, and the intersection of those two in American society.
What is your study of the history of this in terms of the issue that matters on the first Tuesday of November? Is that a news item that matters October 29, 30, 31, and into the month, or is it something framed up weeks before?
I think it's something, except on the margins, I think it's something that's framed up well before the actual election. I think something that has been fairly well studied about the 2016 election, and we have to be a little bit careful drawing parallels to 2016 because every election is unique, every election is its own thing, but that was a close election, and what attention was focused on in the last 10 days was James Comey's reopening of the FBI investigation and announcement publicly of reopening the FBI investigation to Hillary Clinton. And that really framed the last part of the election. We did see some final movement towards Trump, which led to undecided and voters who didn't like either of the candidates breaking more for Trump, which provided him his margin of victory. What we've seen in this election is a much more stable set of polling. Biden has led by between 5 and 10 points in most poll aggregates for virtually the entire time the campaign has been running, going back to fall of last year. So it would take a very, very significant issue in the final weeks of the campaign, I think, to change the basic structural factor, which is that both these candidates are well known and most of the electorate has made up their mind. Then the question becomes, how many of those people actually do end up turning up to vote, and how many of them have their ballots counted, and of course, where in the Electoral College those counts happen.
Jacob, good morning. I wonder if a vaccine is a significant enough issue, as you refer to it, to change things. We have seen moves by the US to prepare various parts of the machinery for a vaccine coming before or at the very start of November. If that were to happen, would that be something that would stick to either one, well, would boost Trump and his potential here? Is it something that's going to actually be associated in the mind of voters with his campaign?
I mean, I would be a little hesitant to make a prediction about how a prospective vaccine, we don't know, what the announcement is going to be. We don't know if it's going to be sort of given with a wholehearted approval of the FDA or sort of rushed out in order to meet that deadline for political purposes. And we don't know what the framing of that is going to be. There's already a lot of politicization of vaccines. A significant portion of the American public already says that they won't take a vaccine, which is frightening from a public health perspective and also from a political perspective. If we can't even even agree on the basics of sort of public health measures, that makes for some hard times ahead in terms of controlling this and future pandemics. But the question about vaccines is also, since it's going to fall into such an openly politicized era, are voters who are genuinely undecided, of which I think there are relatively few compared to most elections, are they going to actually be swayed by this, or are they going to be convinced that this is fundamentally, something that was done on this timing for political reasons, and or that the vaccine is not necessarily as effective? Even if it does happen, even if it is effective, having a vaccine and actually distributing it are two very different things.
They are, and the timescales might be different. What about on the economy, something that President Trump often polls well on? Jacob, is there still time for him to do something to turn things around on that front?
Well, he does. You're absolutely right that the economy tends to be the brightest spot for him of his polling, although even that has faltered recently. If he can convince the Democrats, who have generally been willing, arguably against their political interests, to pass another stimulus package, another bailout for particularly individuals and small businesses, then I think you might see some more encouraging economic numbers. You might see movement for him on that basis. But, the negotiations have been stalled for weeks. There seems to be a really serious disagreement, not only in terms of the scope of a bailout, but also what it would be directed to, what it would include, whether it would include funding for the Postal Service, et cetera, et cetera. And as the election gets closer and closer, it's harder to imagine the Democrats in the House and the Republicans in the Senate actually being able to agree to something that would land on the president's desk.
That's true as we get towards November. Jacob Parakilas, thank you so much. He is at the London School of Economics. Right now, with our news in New York City, our First Word News, here's Ritika Gupta.
Thanks, Tom. The CDC says states should prepare for a coronavirus vaccine to be ready just a couple of days before the presidential election. That's an aggressive goal that would depend on shots being tested and reviewed by then. President Trump has previously said he thinks a vaccine will be ready by Election Day. That claim has raised questions about political interference in vaccine reviews. And President Trump is once again denouncing voting by mail. He told a crowd in North Carolina that if they vote by mail, they should also go to the polls and try to vote a second time. He said that's a way to determine whether their mail ballots were actually counted. That could lead to voters violating the law if they tried to cast a second ballot. And President Trump has ordered a review of federal funding for what he calls anarchist cities. It's aimed specifically at New York, Seattle, Washington, D.C., and Portland, Oregon. All are Democratic-run cities that have had protests demanding racial justice. Any move to restrict federal funds would probably result in a court case. And in baseball, Hall of Fame pitcher Tom Seaver has died. Seaver turned the New York Mets from lovable losers to World Series champions in 1969. He's one of the only two pitchers to record more than 300 wins, 3,000 strikeouts, and an earned run average of less than 3.0. Tom Seaver was 75. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
And Ritika Gupta, of course, knowing that the giant was Walter Johnson of another time and place. What was amazing about Seaver was he did not throw the ball, he pitched the ball. This is so different. It was absolutely extraordinary. They are all different. All these giant pitchers are different. And what was so extraordinary about Tom Seaver is he was so strong and he got so low to the mound. His right knee would touch the mound as he pitched, which you'd sit in your backyard and try and fake that, and you couldn't do it because you were not as strong as Mr. Seaver.
see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg Surveillance. Good morning, everyone. Anna Edwards in London, in for Francine Lacroix. I'm Tom Keeney in New York. It is Jobs Day, and that will be tomorrow. It is Claims Day today, and it is, as I said earlier this morning, odd. It is a most unusual economy in a most unusual pandemic, and we need perspective. One of the essays of the summer is from one of our best. Andres Velasco is the former Chile finance minister, but that barely describes his academic excellence, now holding court at the London School of Economics and their School of Public Policy. Dean, wonderful to have you here, and congratulations on really going back and looking. I mean, you must have read your Skidelsky, is all I can say, but you read up on Keynes and you looked at the myths of Keynes. What do we get wrong about the linkage of an ancient Keynesian theory with modern fiscal policy?
Thank you, Tom. Well, Keynes is a very important thinker, but we have to get him right. I think governments around the world are doing the right thing nowadays when they are Keynesian, because in bad times we have to spend, whatever it takes to keep the economy afloat. But of course, that does not mean that we should carry on doing the same thing when the crisis ends. What we're seeing today in the world is that there are two kinds of countries. Those that did their homework right before the crisis and were in a position to borrow and spend today, and those that did not and therefore have no fiscal space today, and they cannot spend more to help small businesses and help families. And the consequences of that are terrible, not just in economic terms, but also in human and social terms. And we're seeing many countries in the world who got that wrong and are not being able to follow through with the right policies today.
Part of this, and I give Joe Stiglitz great credit for this, of emphasizing the little g, which is the growth rate, which provides salvation to a fiscal expansion. Do you have a confidence that the greater developed world or the less developed world can generate the growth down the road to pay off this fiscal expansion?
That's a very big question. The relationship you are mentioning is one between the speed of growth of the economy and the rate of interest on debt. And you can see it's pretty intuitive that if the economy is growing very quickly and the interest rate is not very high, then debt does not pile up and you can spend more without necessarily having to raise taxes in the future. That is the situation today because interest rates are as low around the world as they've ever been. But we cannot be entirely sure that this will be the situation forever. And it is clearly not the situation in every country today. As long as the interest rate is very, very low, you can spend, you can borrow, the carrying cost of that debt is relatively small, and everything is fine. And it's pretty clear, it's pretty likely that that will be the situation for the next year or two or three. Will that be the situation 5 years from now? Who is to say? And that's why I think we have to be a little bit careful, not necessarily in holding back today, but in making plans today to undo some of the spending a couple of years from now. And some countries have the political institutions that will allow them to do that, and some countries don't. And that's where we can see some trouble in the future.
Professor Velasco, good morning to you. With that said, what do you think Keynes and his general theory of employment, interest and money, what would he have made of the UK context right now, the plan to end the furlough scheme at the end of October and risk what many people see as a big spike up in unemployment? What do you think his recipe would be, or what is yours?
I think his recipe would have been, and I share that view, that you've got to keep the government support as long as the economy needs it. And it is pretty clear that the crisis in the UK, in the US, and in much of the world is far from over. Yes, businesses are beginning to open up, but we have no idea how quick that reopening will be. It is pretty clear that many businesses will not be viable in the future. Many families have gone through their savings and today are cash poor. And as a result, withdrawing support for families, for furloughed workers, causes a very big risk that not only might we have a second wave of infection, we may also have a second wave of unemployment, job losses. And of course, the two things are related, because if people have to go out and work because they run out of cash, it is much more difficult to stay home. It is much more difficult to keep social distancing. So the risk of a spiral of an economy that worsens and a contagion situation that worsens is very, very high. We've seen it in other countries in the world.
Okay.
Let us hope the same thing does not happen in the UK.
And if the government is trying to work out how it wants to pay for all of that assistance that it has given already and will have to give to families here in the UK, Professor, what limits should they keep in mind in terms of the ability of an economy like the UK to borrow? Do we know what the limit is anymore?
We don't know. It's pretty clear, I think, that the limit today is higher than it used to be because of the factor I mentioned a minute ago. The interest rate is so low that you don't have to spend a lot of money paying interest every year, and you can spend that money on social support, infrastructure, and what have you. But that is the good news. The bad news is that there is a limit. Economies around the world are testing that limit. For countries like the US or the UK, we're not quite there yet. Public debt is about 100% of GDP. It is much higher than that in Japan. It has been much higher in the UK, say in the aftermath of World War II. So we're not there yet. And as a result, I don't think this is the right time to pull back when it comes to spending and support for families. But we should be mindful that there is a limit, and that just as governments are spending more today, at some point in the future, they will have to spend less or raise taxes. And that's a conversation the UK will have to have at some point.
Dean Velasco, thank you so much. Greatly appreciate it. Andres Velasco, of course, a former Chile finance minister at the London School of Economics. A deterioration of the tape, -10 on futures, Dow futures, -15. I don't want to overplay it here. There's a churn here getting up to 8:30 this morning in New York and in Washington in the claims report. In our next hour, an update on the pandemic, challenges in the Midwest. Jason Farley of Johns Hopkins University. Stay with us. This is Bloomberg.
Novartis. How has it shaped the leader you've become in dealing with this pandemic?
What I find to be incredibly valuable in a situation like this is having that breadth of experience leading large organizations.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Anna Edwards here in London with Tom Keane in New York. Let's talk about what's happening in Latin America now. In Brazil, specifically, 47,000 new confirmed coronavirus cases have pushed the country's total to almost 4 million after social distancing measures saw the biggest economic drop on record in the second quarter. The central bank president, Roberto Campos Neto, says that he sees the economy shrinking 5% this year. He spoke exclusively with Bloomberg's Eric Schatzker.
The fourth quarter will be better than what the market's forecasting. And for next year, we also think that our growth is better than the forecast. It obviously all depends on a lot of external factors and internal factors related to the way the economic agents see our program, the credibility that we can generate, and the way we interact, these variables interact.
Governor Campos Neto, based on what you just said, based on what you can see now, 2/3 of the way through the third quarter, and based on your expectation that the fourth quarter is going to be, as you said, I think, slightly better than what the market expects, what would you anticipate at this moment the full year decline for 2020 will be in GDP?
It's going to be around -5%, with next year growing a little bit more than 4%.
So in both cases, if I'm not mistaken, that is better than what, well, as you pointed out, some private economists see GDP dropping by less than 5%, but growth in excess of 4% would be substantial for 2021, particularly considering where the economy was in the second quarter.
Yes, you have two groups of people. You have one group of people who is revising better the growth this year, but is shaving off the growth of next year, because they think the stimulus is stronger this year, but there's going to be this headwind once the stimulus phases out. And there's another group of people that says, no, what I'm seeing is a strong recovery. I think that the assumptions that I had in terms of the economy stalling due to the pandemic, the reactions being better, and so they're updating this year better without changing next year. So we have these two groups of people today.
Like many countries, Brazil has been handing out cash during the pandemic to support the economy and to help families. Earlier this week, that stipend, the monthly stipend, was cut in half to 300 reais, about $55 from 600. What impact is that going to have on the pace of the recovery?
I think it's important to quantify the overall group of measures that we're taking to face the pandemic. When you look at what the other countries are doing, you can basically divide in 5 parts. Monetary policy, which Brazil did aggressively, moving interest rates from 4.5 to 2. Liquidity and capital measures, which we also did aggressively. Liquidity measures amount to 16.7% of GDP. Capital measures amount to 17.5% of GDP. So those are the two groups. Then you have taxes, which is either delaying or canceling taxes. Then you have the direct transfers, and then you have the credit lines. When you look at direct transfers, Brazil did a huge program of direct transfers based on the lower part of the population, on the poorer population, on the people who needed the most. And also we had a bunch of credit programs that are in place right now. Some of them took a little bit longer than we expected, but all of them are in place right now. And we actually had some that started this week. When I look at the amount of money that was done, that was transferred directly, plus all the credit programs, I see an impulse that is strong enough to take us to the first, between January and February of next year. So yes, there is always a time decay from the fiscal expenditures that will tend to phase out, and we needed to phase out because it was impossible for Brazil to keep paying 600 reais to everybody every month, because then it would get into another dimension, which would be more problematic, which is a lack of credibility in the fiscal front. So I think Brazil did what it could.
Eric Schatzker with a gentleman from Brazil. We're going to move forward to the jobs report. We've got claims coming up and then a real mystery about the Friday jobs report. We're thrilled that Christopher Rupke will join us. He's with MUFJ, and we're going to really dive into the report here and try and glean the many cross currents of the American labor economy. We do that with futures at -10, yields fractionally higher as well, some dollar strength. This is Bloomberg. Stay with us.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
This morning, the blizzard of stories that make up this most odd end of summer today claims tomorrow an unforecastable jobs report that is, quote, a tough call. Dollar strength, yields, oh, they churn. The VIX doing odd and strange things. Is anyone out there? Yes. They're driving the Dow back over 29,000. And how odd, President Trump says vote early, vote often. Vice President Biden says vote once, and, quote, as early as you are permitted. Good morning, everyone. Bloomberg Surveillance, Tom Keene in New York, Anna Edwards in London for Francine Lacroix as well. Francine, I got to get 3 seconds in here on Brexit. I mean, I don't understand the British response, if any, to Mr. Barnier, who seems to be the only one not taking the month of August off.
Yeah, I don't know. Are we running down the clock? Is that the? I'm sure that's not the official position, but there is a sense of that, isn't there? I mean, Brexit happened 31st of January, Tom. Now we're working on the trade deal, still stumbling over some of the same rules and regulations around product and the fishing industry, which is something we've talked about before. But yeah, Michel Barnier very outspoken yesterday about his disappointment. He sounded like a sort of disapproving parent.
Sounded like on the edge of being an American, which he probably wouldn't like me to say. Futures negative 14 right now. We'll do the data here in a bit. We've got a wonderful guest to frame out the oddity of this claims and then into jobs report over the next 48 hours. First, your first word news in New York City. Here's Ritika Gupta.
Morning, Tom. Anna, the timing on this may raise some eyebrows. The CDC has told states that a coronavirus vaccine could be ready by November the 1st. That's just 2 days before the presidential election, and it's an aggressive goal that would depend on shots being tested and reviewed by then. President Trump's political future hinges on the response to the virus that has killed almost 185,000 Americans. New polls show Joe Biden leading President Trump in 3 swing states that the president won 4 years ago. According to Fox News, Biden has the edge in Wisconsin, North Carolina, and Arizona. In all 3 states, Biden shows strength amongst women and suburban voters. Secretary of State Mike Pompeo has imposed new limits on Chinese diplomats in the U.S. The curbs have to do with visits to college campuses, meetings with local officials, and cultural events. The U.S. is taking the steps to match Chinese limits on American diplomats. And the Federal Reserve says the U.S. economy is showing progress, but some uncertainty persists. The central bank's Beige Book report says childcare access has emerged as a major roadblock for workers. Meanwhile, worries about loan defaults have started to rise in the financial sector. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Anna.
Ritika, thanks so much. Within the mystery of claims and jobs, interesting to see what the market does. You're churning into that claims report at 8:30 and then on to this unforecastable Friday that we're going to see tomorrow. Euro prints a 120 and gives back almost 2 big figures. Weaker euro 118.20 right now. I believe the yen 106.38. So stronger dollar. DXY buttressed up against 93. I'm going to leave it at that. Anna Edwards, what I would note is Turkish lira is really having a challenge of it against euro, against dollar. Turkish lira rounded up 7.44. Get your attention.
Yeah, I saw some Turkish inflation data dropping earlier. Let's have a look at what's going on more broadly here in the European time zone. Then, Tom, we've got stocks across Europe up by 0.8%, off earlier highs. The banking sector off earlier highs, although reflecting what you saw yesterday in the US, a little bit of a broadening in the rally stateside. So it wasn't all about tech yesterday. It was about a broader basket of sectors, if you like. And we see banks playing catch up a little bit on that theme here in Europe. I put in NASDAQ futures as well. NASDAQ futures do decidedly point lower now, don't they? Down 0.8%. And also reflecting on the pound, we talked about some of the challenges around Brexit with Jordan Rochester earlier on. The pound down 0.5% now, 132.78. As the Bank of England says, it could do more.
Every economist is different. Christopher Rupke is at MUFG Union Bank. And what he does, and the title's Chief Financial Economist, and what he does is he brilliantly folds yield dynamics into his economics. And we are thrilled he could join us now to paint the picture of where the markets are and the economics is versus this extremely odd American labor economy. Chris Rupke, what's the unemployment rate right now? What's the real unemployment rate?
Well, that's a good question. I mean, they say behind the 10.2% unemployment rate, there's 16 million people out of work, but then why are roughly 27, 28 million people receiving unemployment benefits? I mean, there's supposed to be some double counting there, but can there be double counting for 8, 9, 10, 11, 12 weeks? It's a puzzle out there. But if we had to look at it, there's a lot of people who dropped out of the labor force. There's people working part-time for economic reasons because they can't get full-time work. If we add all those people in, the unemployment rate's probably not 10%. It's probably closer to 15% right now.
What will we know tomorrow at 8:32 a.m.? I mean, Michael McKee's going to digest the data for us. We're going to go to a bunch of people that will analyze it. But, forget about like guessing numbers. conceptually, what are we going to know tomorrow at 8:32 a.m.?
Yeah, I mean, I don't know. I mean, there's a big hole in the labor market. I guess there's a discrepancy here between demand factors in the economy, growth, and actual joblessness out there. You know, there's a lot of cross currents with the $600 weekly checks going away for August. That's going to punch a hole in retail sales potentially. But the labor market's kind of in its own orbit right now, and we're just clawing our way back. So we lost 22 million jobs, payroll jobs, March and April. If we get 1.5 million jobs tomorrow for the month of August, you know, we're still going to be down a good 11 million jobs for this cycle, which is frightening. It's more jobs lost, payroll jobs lost than the last recession still.
And Chris, good morning to you. It's Anna in London. I'm just looking at a column, a Bloomberg opinion column by Bill Dudley, formerly of the Fed, of course, now at Princeton. And he's making the point that the Fed's new approach won't help the economy now. He says recovery depends much more on Congress and the White House. To your point about what's happening with those checks that were coming from the U.S. government and maybe are less forthcoming now, would you go along with that view? It's all about Congress and what Congress can do?
Well, potentially. I mean, the Fed's kind of spent all their ammunition here. I mean, they're buying $80 billion worth of securities a month, you know, promising people they're not going to raise rates until inflation comes back and, you know, the labor market gets back closer to 3.5% unemployment rate. You know, maybe they're trying to tell people they're not going to raise rates for, you know, a good 7 years or something. I don't know how much that's going to stimulate business investment. It's very tricky here, I have to say, with all these cross currents, though, because as these, you know, $600 weekly checks went away, subtracting like $60 billion a month of spending from August, you know, we have the payroll tax cut, if you really think that's a payroll tax cut, coming on September 1. It's coming September 1. That's worth $80 billion. If all companies follow through. I don't even know if my own company is going to follow through with that. It's just a very confusing environment right now.
It is confusing, and so perhaps we look at where Americans are spending or not spending their money. What do you see in the propensity to consume and the propensity to save in the U.S. that gives you any clues about the way forward?
Yeah, I was a little surprised at the characterization of the Beige Book. They said there was strong auto sales, but we just got auto sales for August earlier in the week, and they're running about 15.2 million annual rate. They were closer to 17 million at an annual rate back in January and February before the pandemic. I don't know if there's not that much pent-up demand, right? I mean, if sales came down, they should be swinging back to, you know, 22 million annual rate for people to buy the cars that they were not able to buy during the lockdown. So that doesn't make a whole lot of sense either, this demand side of the economy.
Chris Repke, I want to go over to your claim right now, which is yield dynamics. What is it distinctive about the full faith and credit market that speaks to us? What is the bond market telling us about where we are right now?
Well, I guess they're telling us there's a flood of liquidity out there that's keeping, dampening yields and keeping 10-year Treasury yields down. It sounds like Fed officials, if the, you know, there's a lot of talk that the Fed's reflating, okay, from decades ago. But, you know, I get the feeling that Fed officials now under Fed Chair Powell, if the 10-year Treasury yield were to go up to 0.9% or 1% and stick there, I think they might raise the amount of QE purchases of treasuries from 80 billion higher. I think they very much want to, if not do explicit yield curve control, they definitely want to keep 10-year treasury yields down below 1% here. They think that's one of the big drivers of their, you know, free money Chris, stimulative policy.
Can you constructively reflate into a pegged yield?
Yeah, that's, I mean, would the bond market show that? No, I mean, you're probably right. No, I mean, the bond market's probably, the bond market vigilantes probably aren't going to ride again. They're not going to sell off yields to absurdly high levels that the Fed has to act. So, yeah, I mean, the bond market, the 10-year Treasury yield itself may not be the best temperature gauge about how, for how hot or cold the economy is running here. It's probably just going to stick very close here to 0.7% as far as I can see. They want it there.
Do you look ahead, Chris, to a time where we can take signals from the bond market once again? I mean, we live in a world where central banks are such big players in bond markets in various parts of the world that maybe is this just a vision of the future?
Well, I mean, I guess if the Fed were to go, well, I hate to even mention it, but, suppose they weren't happy with the recovery and they decided that negative rates in the U.S. would be good here. I guess the bond market's still a good temperature gauge. It's just it's a smaller scale, if you will. So if it's 0.65% now, if it started trading like 30 or 40 basis points, 0.3 or 0.4%, that could tell you something. That could tell you that the economy is weak and the bond market wants the Fed to do something more, like buy more than $80 billion a month.
Thanks very much, Chris. Good to speak to you. Chris Rotke, MUFG Union Bank Chief Financial Economist. Great to have your perspective on the program. Coming up on Bloomberg Markets a little bit later on this morning, Bill Ackman, Pershing Square Capital CEO. A lot of headlines around his interest in Airbnb. What will he have to say about that? Those headlines earlier on this week. That is at 1 p.m. in New York, 6 p.m. in London. This is Bloomberg.